Hey guys, subscribe to my channel and let's talk about capital markets. Imagine a giant marketplace where money flows. That's what capital markets are. They connect those who have money, like investors, with those who need it, such as businesses and governments. Think of it like a financial matchmaking system. It's where companies raise funds to grow and governments finance projects. Capital markets are the backbone of a strong economy. They provide the fuel for businesses to innovate, create jobs, and drive economic growth. Without them, our world would look a lot different. Fewer businesses, less innovation, and slower progress. Now let's dive into the different parts of this market. We'll start with the primary market and a little something called an IPO. Imagine a cool startup, Tech Innovators Inc., creating cutting-edge gadgets. They need money to expand. So, they decide to go public through an initial public offering, or IPO. It's like a coming out party for a company on the stock market. In an IPO, a company sells shares of itself to the public for the first time. Remember Facebook's IPO or Airbnb's huge successes. Tech Innovators Inc. does the same, offering shares at a set price. Investors buy these shares, hoping their value will go up. This influx of cash helps Tech Innovators Inc. grow. They can hire more people, build new factories, and reach more customers. That's the power of the primary market. Now let's talk about the secondary market, where the real action happens, the stock market. This is where shares of companies like Tech Innovators Inc., now public, are bought and sold. Think of it like a giant auction. You can buy shares of companies you believe in, like Tesla, Apple, or even Tech Innovators Inc. If the company performs well, its share price goes up and your investment grows. But remember, prices can go down too. It's all about supply and demand. The stock market provides liquidity. It means you can easily buy or sell shares. This flexibility makes it attractive for investors and keeps the money flowing in the market. Now let's move on to bonds. Ever lent money to a friend? Bonds are similar, but you're lending to the government. Let's say the government needs money to build a new bridge. They issue bonds, essentially borrowing from you. You lend them money for a fixed period at a fixed interest rate. It's like a loan with a guaranteed return. At the end of the term, you get your money back with interest. Bonds are generally considered less risky than stocks. They offer a steady income stream, making them attractive to conservative investors. So, why should we care about capital markets? Well, they're important for everyone: businesses, investors, and even governments. For businesses, they provide access to funds for growth and expansion. It's like a financial launchpad. For investors, they offer an opportunity to grow their wealth by investing in promising companies or government projects. Think of it as planting seeds for your financial future. And for governments, capital markets provide a way to raise funds for public projects, creating jobs and boosting the economy. In a nutshell, capital markets are the engine of economic growth, connecting those with capital to those who can put it to good use.